Okay, welcome back to Easy Crypto Bites. Today we're going to talk about 3 things that cause most people to lose money in crypto when they're investing in crypto. Okay, we're just going to jump right in. First of all, number 1 is FOMO, fear of missing out. Now, FOMO is when the markets are just going crazy, things are going up, and just whatever asset you're looking at, whether it's Bitcoin, altcoins, and you're thinking, man, this is awesome. The euphoria in the market is just climbing and growing. Everybody's talking about how great crypto is, and you get this fear that you got to get in. You're gonna miss it. You're gonna miss it. So you just dump everything in and you jump in, and then all of a sudden, bam! The market turns tops out, drops, and what you did is you bought at the top of the market, like so many other people, and you bought at the top of the market, so you lost everything. And with crypto, let's say it's Bitcoin, if you wait an entire other cycle, you might make your money back. You probably will, because Bitcoin has a tendency to keep going up, because of the asset class and the way it's adoption. So you might be able to get past and make it past this FOMO, but you're going to have to wait an entire cycle again, which is usually about 4 years for Bitcoin. And so this idea of FOMO is a real thing, man. It really causes a lot of people to lose their shirts in the markets. Second thing is FUD. FUD is the opposite of FOMO. FUD is the fear, uncertainty, and doubt that comes into the market because the news cycle, something comes into the news cycle, and it starts talking about, you hear all the pundits on TV talking about how Bitcoin is a scam, and cryptocurrency is a scam, and this is a scam, and all of a sudden the entire market gets fearful, and and the markets drop, and the prices drop, and as a retail investor, you get scared and you start pulling your money out because you bought it at a higher price, and so then you end up selling at a loss and losing your money. And this is called FUD, fear, uncertainty, and doubt. And what happens is the big players that come into the market, they use these 2 things to basically make money on the retail through the retail markets. So you got your big whales and your institutional investors. They know when to buy and when to sell, and they know how to manipulate the markets and the sentiment in the markets to get you to buy when you should be selling, and to get you to sell when you should be buying. The third thing is greed. Greed is what happens at the top of the market, and it goes hand in hand with FOMO. Man, maybe you bought in when the markets were low, and you're doing awesome, and you are like making money, man. You are up 100%. Sorry about this, my camera just... So you are making money, and let's say you're killing it. You're up 100%. You're up 500%. If you're in crypto, you can be up 20,000%. And you get greedy. You're like, wow, I put $100 in, and I'm at $1,000, and like this thing could go to $20,000, and that happens sometimes for sure. But the greed takes a hold, and you're thinking, I can double this, I can triple this, and then all of a sudden, bam, the market drops, and you lose that $1,000 turns back into not $100 that you put in, but it turns into $30 because it goes all the way the other way, and you even lose the amount that you put in when you're up so high. And so many people have done this. I've done this. Everybody's done this. But this is called greed. So how do we combat these 3 forces and these 3 things that get so many people to lose their money? Well, number 1, you have a plan. You don't trade emotionally, you trade on a plan. Or you don't invest emotionally, you invest on a plan. When the FUD comes in to the market and the prices are going down and they dip, you have a plan to DCA in, which is dollar cost average in. Maybe you got $10,000 to invest, and you got it sitting on the sidelines. And so as the prices are dropping, and I did this all through the bear market, This is what I actually had a plan, and I said, you know what, we're in a bear market, prices are dropping, and I'm going to take the money that I have, I'm putting $50 to $100 every couple weeks, every week, every month, and I did this all the way through the bear market. Now, I'm still down on some of those investments because you don't always get as you're putting money in, as the price going down, your entry point level is going down also, but you're not, we haven't hit the bull market yet for the altcoins and stuff like that. And so basically you can still be down, but you're not going to be down way down like you would if you put it up here and now the price is down here, because you're little by little adding to your positions and you're bringing that entry, you're averaging your entry downwards. And so that's one way to combat this. When the fear comes in and the prices are dropping, you take $100 here, $50 there, or whatever a little bit is for you, and you implement that strategy and that plan, and you start putting your money in. Okay, and you do the same thing to combat FOMO and greed, but you do it on the way up. So you have price points, you have targets where you believe the prices are going to go, and you decide to sell and take a certain amount of profits at each of those targets. So let's say, just by example, let's say Bitcoin is at $15,000. And you bought in as it was going down to $15,000. Maybe you started buying in at $50,000. Then you put some in at $20,000. You put some in as it's going down, and then now it's at $15,000. And maybe your entry level is averaged down to about $20,000. Now Bitcoin starts going back up. Bitcoin's up to $20,000. You're good. You're breaking even. Now Bitcoin's up to $30,000, $40,000, $50,000, all the way. As it's going up, you might take 10% profit at each certain. Maybe you're thinking, okay, at 30,000 I'm going to take 10% profit off the table. At 40,000 I'm going to take 10%. At 50,000 I'm going to take 10%. At 70,000 I'm going to take 10%. And what happens is as the price is going up, you're taking a little bit off the table each time, so that, because nobody knows where the top's going to be. Nobody knows where the bottom's going to be. So this DCAN is a technique to keep yourself locked into a strategy and not being manipulated by these large whales and these institutional investors that are trying to use you as liquidity so they can get out of their positions. You're methodically going by a plan, and you're not allowing the emotion of the markets to manipulate you and to force you to buy and sell according to those emotions. So this is how you combat the greed and the FOMO and the FUD. I hope this helped. This is Easy Crypto Bytes. If you got something out of this, like, subscribe, and please share this video, and we'll see you next time.